Great. All right. Thank you, everybody, for hopping on. We're going to be talking about landlord insurance, something that, as an investor myself, can be a little complicated. And luckily, we brought on the best of the best here to kind of help navigate through some of this. So, we're going to talk about who's responsible when damage happens, where does coverage start and stop. And of course, just so everyone is aware, every state, every jurisdiction, every type of property has different kind of nuances to their policy. So, it's really important to understand that everything we talk about is going to be on kind of a broad stroke, but to talk to the appropriate professionals for your local market. So my name is Rick Albert. I'm a Los Angeles-based broker here in kind of Southern California area. I'm also an out-of-state investor and the host of the podcast called The Key to the City of Angels. And I'm super excited to have Daniel McCommons of Honeycomb Insurance and Rob Vendramin of ePremium Insurance. Gentlemen, why don't you guys introduce yourselves? Daniel, you can get started.
Sure thing. Thanks, Rick. Appreciate it. So, as you said, my name is Daniel McCommons. I'm director of underwriting at Honeycomb Insurance. A little bit of background on Honeycomb first. We are an insurance carrier. We work directly with insurance agents and brokers, and to provide really real estate solutions. So, for investors and landlords, we offer products in 11 states. And in my role at Honeycomb as a director of underwriting, manage teams of underwriters, obviously. They're focused on kind of underwriting risk evaluation. I handle strategic direction for my regions. And ultimately, we just provide solutions for property owners really to protect their investments. Probably what I enjoy, I guess, most about the space is that insurance kind of sits in the intersection of real estate risk management and kind of business ops, if you will. Every property has a different risk profile. So for me, every time I look at a risk or a property, it's a new viewpoint for me. So it is enjoyable for that. But yes, go ahead, Rob. Thank you.
Sure. Thanks, Daniel. Rob Vendramin with ePremium Insurance Agency. We are a specialty agency that focuses on products for the property management industry and property owners for multifamily, single family, and we also have coverages available for vacation rental properties. So our focus is really on a renter's insurance policy, as I know what we're going to be talking about today, and how we have our own policy that's set up kind of through a managing general agency. I am the VP of our insurance operations, and come with over 20 years of insurance experience with pretty much all lines. And I'm kind of an insurance nerd, so looking forward to talking about it today.
Perfect. Thank you, gentlemen. And just as a couple of housekeeping items, I do apologize for not bringing this up earlier. We'd love to hear your thoughts, so feel free to. Oh, yes, thank you for the slides. Feel free to put thoughts, whatever, in the chat. If you have a specific question, we'll try to get to the questions at the end. There's a Q&A section for that, so we can kind of go through that. This session is being recorded, so if you want to see our beautiful faces again, thank you, first of all. Second of all, feel free to watch it and share it with everyone you know. And of course, thank you, Front Lobby, for organizing it. So why don't we kind of get started? Let's kind of, I'm trying to figure out the best way to word it. Let's start with kind of the basics, right? So most landlords, they have insurance, but it's not clear, right? It feels like hundreds of pages of who knows what do we look for. So, Daniel, when you're working with landlords, what do you most often see as the confusion around the coverage?
Yeah, it's a good question. I'd say you kind of hit the nail on the head. It's a lot of information, and there's probably a fair amount of kind of legalese and things like that. And really, I was probably kind of the meat of the policy. That's what we look for is what does the policy say? What is the structure? So I think one of the biggest, I guess, misunderstandings is what does the policy cover? A lot of people think that it covers kind of everything that happens at the property. The reality is that a landlord policy is really designed to primarily protect the physical property, so the building itself, and then also provide liability protection. And then the third piece that I think a lot of people miss is that it also covers some lost rental income. So at the time of a loss, post-loss, you would lose, your tenant, for example, and lose that income. It covers, generally would cover that as well. It's also key to understand the limitations of the policy. Exclusions is what we'd call them, and what you would look for in your policy. A lot of times people don't find that out until the claim happens and they realize that an important coverage is now excluded on their policy. So I think probably a good example where people don't understand is maybe that these policies are designed for more so sudden and accidental loss, not going ongoing maintenance issues, not wear and tear, not preventable property conditions.
Got it. I appreciate that. Rob, from the tenant insurance side, are you seeing similar misunderstandings? Like what's going on in your world?
Sure. What we see most often is assumptions being made by tenants about coverage. So if they are not required to buy renter's insurance, most of them do not get it because they don't really understand the value until it's too late. And so what often happens is, let's say there is an electrical fire and they are displaced from their unit. Because they don't have renter's insurance, they then go to the landlord or the property manager and expect that they will house them either temporarily or in a different unit, and that they will cover the damage of their belongings that were destroyed in that fire, as an example. So that's often what people don't recognize is the true benefits for the tenants when they have their own insurance, and the benefits to the landlord when their residents have that insurance. The other one that's often overlooked is personal liability. An example would be a dog bite injury that is caused by the tenant's animal. So that would be covered under their renter's insurance policy. And if that doesn't exist, then the injured party may go to the landlord who approved their tenancy and seek damages through that.
Got it. Okay, so then let's kind of break down the two different types of policies, right? Because we have the landlord's policy and then we have like a tenant insurance, right? Especially like I know on my leases, we always say, hey, we expect a certain, $100,000 policy for tenants, things like that. So Daniel, can you walk us through basically what is a typical policy? Like what are some of like the high level things that someone should be
Mhm.
looking at when they're looking at their policy that it's actually designed to protect? Just so it's almost like
Gotcha.
think of it more like a checklist type deal.
Sure. Yeah, absolutely. Good question. So, just at a high level, like you said, the landlord policy is really built to protect those three major areas I described. One is first the physical building itself. So, that would also include any attached or potentially detached structures. And in some cases, again, policy specific, but in a lot of cases, that'll include some of your major systems and equipment, from like breakdown, things like that, like your HVAC, plumbing, things like that. And essentially the property owned by the entity. In some cases, as a rental property owner, you may actually own some of the physical property that moves around, chairs and things like that, potentially. The second piece, and one that's probably overlooked quite a bit, is the liability side. That's incredibly important. If someone gets injured at the property or you're found legally responsible or liable for that injury, that includes could be medical, legal expenses, any settlements, judgments, things like that. So when we talk about checklist of those things, obviously we want to make sure the coverage is commensurate with the exposure, or in this case, you have enough coverage for your building and belongings. Or if you have assets to protect, obviously you want to make sure the liability coverage is commensurate with those assets. The third is that other piece that I mentioned previously is the loss of rental income. That's as a property owner, the business is the income of the renters, right? That's how you keep and maintain and kind of continue to operate. So that's again something you want to make sure you're paying close attention to is is there enough coverage in place? Let's assume the worst. In insurance terms, we call it a PMO, or approximate maximum loss. Is there enough coverage in place for that maximum loss situation? If every renter was displaced, could you then replace that income with the rental income coverage? So one thing I think I always stress is that the insurance works best when it's paired with obviously a strong property management practice, regular maintenance inspections. Good documentation is a key element to this as well. And then also, as you kind of mentioned, Rick, kind of your lease agreements, those are also important to have those buttoned up and make sure that the expectations of each parties are clear. The best outcomes happen when property owners are proactive in that approach, kind of from a risk management perspective.
Now, I'm going to do a curveball question for
Mhm.
you, Daniel. Is there a difference? Because one of the big conversations having behind the scenes is like, do I set up my property in an LLC? Do I do this? Do I do that? From an insurance perspective, is there any
Mhm.
major difference? Because it's really the same asset. It's still a house, it's still a building.
Sure. Yeah. Yeah. So, yes, there is to some degree. Generally, in the commercial space, it is more advantageous to have an
Fair.
LLC or some entity set up. And it's for obvious reasons. I'm certainly not an attorney, but your attorney would tell you it's
Right.
a separation of risk, right? It's the same,
Sure.
when we talk about a private, in that liability situation, if somebody was to injure themselves and it's under your personal name, guess who's liable for it? You as an individual, your personal name, right? Versus so we look at it the same way when we're underwriting a risk, for example. Okay, is there any additional exposure that we're picking up because this is a sole proprietor? It's in their individual
Oh,
name,
interesting.
right? So that would be less advantageous for us from a insurance perspective, like insuring the property. If we have a C corp, S corp, a LLC, something like that, where it has that separation of risk.
Oh, that's super interesting. I'm so glad I asked that question. So
Great question and good curveball. Yeah, I like it.
right?
Yeah.
It's okay. I'll have a riddle at the end. Don't you worry.
All right, great.
Rob. So for Rob, how does the tenant insurance kind of fit in all of this?
Sure. So and there also was a question on commercial side for commercial
Hmm.
tenants, and so I'll kind of answer that at the same time because even though the policies are different, they function the same way. So on the renter's insurance specific, it's a personalized policy, and the three major components that are just pretty much in all of them, which is the personal liability, which also acts as the third party liability. That's the piece of it that is available for someone else to make a claim against that policy if that renter was legally liable for something. The content or personal property, and then additional living expenses, which is huge. So that's temporary housing, essentially, oftentimes a reimbursement to live in a hotel or another unit if that dwelling or unit becomes uninhabitable due to a covered loss. And then you kind of look at the other endorsements that are available. They're different by carrier and option. So I know with our policy, it's there's water and sewer backup that's available pretty widely, and that really covers the contents. It doesn't cover damage caused by it, but it does cover the contents. We have earthquake coverage. There's ID theft. A lot of those things that benefit the tenant, but then we also have some things that actually benefit the landlord, such as a pet damage endorsement or bed bug remediation. And so those are two things where it benefits both parties because the tenant doesn't have to pay for those damages, but and the landlord can submit a claim against them. And then I'll also answer another question about the type of unit that came in the chat. And it really comes down to as long as it's a residential unit that someone is renting and doesn't own, you can buy renter's insurance. Apartment, condo, townhome, mobile home, houseboat, whatever it is, because all it does is insure your personal property and then the liability from that location.
All right, Rob. Now I'm going to give you a curveball. What if the unit is unpermitted?
If it's, I'm sorry, what?
What if the unit's unpermitted? So let's say a garage conversion that was done without permits or something along those lines, and they're renting it out.
Gosh, that's a good question.
Does
Usually that would actually come up in the underwriting phase. So
mm,
because what's really interesting in that is how the residence location is defined in the policy. This really kind of gets probably too much into the weeds,
fair
but
enough?
but then you kind of look at how is that location actually defined in the policy, and if it's defined vaguely enough that it would fit that scenario, then you're good. If it's narrowly defined, then you might be in trouble. So if you are going to live in a garage, Rick, I would suggest you speak to your insurance agent and we can take a look at the policy and see if it would fit.
Fair enough. Of course we never want to encourage illegal units, to be fair. I just know that we do see it on occasion. So I thought it'd be a good question to ask. So let's kind of talk a little bit about tenants insurance. As I mentioned earlier, we kind of make it standard in our leases, but you know, just because like I guess increased risk has just been happening year over year, we're seeing it become even more popular. Is that kind of what you're seeing, Rob? And if in terms of like why it's becoming more popular, what have you been seeing?
Sure. Well, I think it's partly becoming more popular, as I've started seeing over the past years, is because of I think there's better education in the marketplace of the value that renters insurance has. To be honest, the education is on the landlords and the property managers. They see the
Hmm.
value in it because now they have an outlet to submit a claim for that was, for damages caused by the tenant. The tenants benefit from it by being essentially forced to get it. They recognize that value at the time of the claim, but once that happens, they'll never not have it again because they see the benefit of having that.
Got it. And then for Daniel, does having renter's insurance or tenant insurance, does that affect your policy and when you're doing your underwriting?
So from our side, when we're underwriting a risk, we will use that as more of a tool just to understand the management practices. It doesn't necessarily affect how we underwrite that risk individually, but obviously, if somebody has in their lease agreement that they're requiring, the renter or the tenant to have, coverage in place, that's a good indication that that's a good either property manager or a property owner, that they're at least risk management minded. So it's really just a plus that we look at. It wouldn't be something that we'd like maybe decline a risk for or maybe offer terms for it. But it is kind of one of those things that we do kind of leverage as just another tool just to understand kind of the management aspect of it.
Got it. Okay. That makes sense. So let's kind of now dive into a couple of different scenarios, right? Because life happens. So let's say, for example, I'm a tenant and I'm not great at cooking and I start a kitchen fire, or I fall asleep and leave the tub running. I've not done either of those things, so no judgment. How would you guys typically respond? This is going to be geared obviously towards the US because each market's different. So, Rob,
Mhm.
from a tenant insurance response, what would you do with me?
Sure. Well, the renter's insurance policy is intended to be primary for those types
Hmm.
of scenarios. So typically what would happen is, the tenant would file a claim for the damage to their belongings and sometimes the additional living expenses. And then the landlord would file a claim against the damages caused to the unit that is not going to be covered. It really is the structure of the building itself. And so there is a limit to that policy. And so I'll tee up Daniel to talk about what might happen if they max out that limit for a particular claim.
All right. So
So
yeah, Daniel, I burned my eggs. What do we do?
here we go. Yeah. Um, Unfortunately, it happens more often than you think, but fortunately, it hasn't happened to you, Rick. Well,
Right.
what we're talking about is kind of we talked about the increased risk earlier. This is what we call risk transfer through subrogation generally. So if you live through a claim, you may have heard that term that we can sometimes subrogate against another policy or another party. That just means that we recover a portion or all of the loss from another party. So in this scenario, the landlord policy would respond and cover damages to the structure itself. Like I said, this would include, the flooring, the cabinetry, obviously the foundational structure, not foundation, I shouldn't say that, but the just the building itself and any repairs related to that. And then if it was a scenario where the tenant contributed to the loss, so in this case where we talk about you set the fire accidentally or not, they're pretty common. There's a few C's we usually talk about. It's because it's tenants generally cause the claims. It's cooking, it's cigarettes, it's contractors. Those are the top three or so of the C's that we see that cause claims. If it's contributor because of those things, that's where we have an opportunity to subrogate or recover some of that loss from that policy. Now, Rob teed it up and said there was usually a limitation on that tenant policy, and then there's really two ways you can do it. You can kind of eat that loss, or you can kind of go through litigation with that individual and try to settle that separately. But when the insurance is exhausted, the policy is really designed to pick that up. So the big takeaway is it's just much easier to navigate kind of the expectations when there's again, the lease language is tight as we discussed, and the insurance requirements are really established up front. So we know that there is a requirement for tenant insurance, and we know there's at least that policy we can pull from if it is something that's truly their fault. And there is, we can kind of prove culpability from a tenant perspective.
Got it. But what happens if, let's say, the tenant doesn't have renters insurance, right? Like it's common to buy properties where you inherit the tenants and
Mhm.
you have to inherit their leases. So what happens then?
Yeah. More often than not, the landlord insurance would cover that, and then again, you can kind of more so go after that individual kind of from a legal perspective. Those we probably all know it's a litigious society, but that is usually more difficult to recoup than going towards an insurance company and subrogating from them.
Yeah, what I've told a lot of people when it comes to should I sue someone, should I go after them? Like, well, it's expensive to be right.
Hmm.
So make sure you're
Hmm.
really, really right.
Yeah, absolutely.
So no, I totally get that. So let's try to do another rental scenario, slip and fall, right? So if a tenant or a guest slips and falls on a property and files a claim or a lawsuit, how do the two policies kind of interact with that? We'll start with you, Daniel.
Yeah. So, generally speaking, the landlord's liability coverage is designed to respond to any injuries connected to the property, right? Um, some of that stuff could be related to, we've had broken stairs, somebody falls. Poor lighting is one that a lot of people don't think about. Walkways, especially if you're in a colder environment, where are your downspouts discharging? Are they, discharging right over a walkway that somebody has to walk through to get to their unit? That could be something that you're responsible for from a liability perspective. And of course, any other kind of deferred maintenance issues where, it's just something that you should have gotten to this. Again, your maintenance practice had to be up to at least a high standard. Now, depending on the circumstances, there are kind of tenant-related factors where the policies could intersect. Rob had mentioned kind of the animal injuries earlier. That's any animal-related injury at the property. That one comes with a lot of nuance, right? How do we determine responsibility in that situation? You probably think easily, oh, what's the tenant's dog or cat or whatever? It's their fault, right? Well, they can kind
Mhm.
of push some of that back onto you and say, well, the fencing or whatever was not appropriate, or a lot of you may own properties that have dog parks. That's another big thing that we look at now with landlord policies. Is there pet washing stations, things like that? Now we're getting into a much more gray area of it's not as easy to say it was the tenant's fault, right? So that's why it's really important to kind of understand the structure of the policy, because a lot of times your landlord policy could have an animal liability exclusion because there's an expectation that the owners should be responsible for the animal. So having, as Rob mentioned, a really good agent can kind of understand those gaps prior to a claim really helps you position yourself post loss.
That is something I never thought of. And we do know that there is an ongoing trend of apartment lifestyles, which is why oftentimes, I don't know what other landlords are experiencing. Feel free to comment in the chat, but we're seeing vacancies take longer because people are like, well, I love where I live. There's this whole lifestyle around it. But from an insurance perspective, that could be a challenge. Rob, what's your take on that, on a slip and fall or those type
Well,
of lawsuits?
it really comes down to where it happened and what caused the slip and fall. So the renter's insurance policy is really designed to be premises based. So it's just within that unit. So here's a couple of examples. If they had a party and someone were injured at their party, and it was through negligence of the tenant, then that injured party would sue, the actual tenant that kind of caused it. That's not the fault of the property manager or the property owner. They
Mm,
didn't do anything wrong. The floors were fine. It's whatever else that caused it. Another one is, kind of Daniel brought up the pet liability. That's becoming a bigger deal with some units or some properties excluding certain breeds, and believe me, I've seen people work their way around them, where it's excluded on the agreement, but yet even though they go through the process, it still is accepted somehow through the process where the property manager either overlooked it or doesn't care. And so that part is becoming more prevalent. But that again can be handled with insurance. There are insurance policies that some that do exclude certain dog breeds. Our policy does not. And then there's others. There's other policies where you can buy, specific higher limits to cover that liability for the renter.
got it. Got it. And then there's also this kind of like umbrella policies, right? To kind of cover anything additional from the liability perspective. Rob, what is your take on like umbrella policies? And then we'll go to Daniel.
Gosh, that's a good question. The umbrella policies are not very popular with these smaller cost insurance policies. So,
Hmm.
I mean, they're always recommended because it adds an extra layer of coverage to the limit. But in this case, if you're talking about a renter's insurance policy that might cost, 18, 20, $22 a month, it's going to be the same or more for that umbrella policy. And then it also depends on the carrier and how they cover those policies. If it's within the same carrier, that's usually aligned. Sometimes not all carriers offer that over renter's insurance. And so if you buy a secondary one, then you'd have to make sure that it actually does cover over and above that liability policy or the renter's insurance policy.
Daniel, what's your take on umbrella policies?
Yeah, I mean, I think the facts are that these liability claims have we've seen this increase. The cost of these claims have increased dramatically over the years and weeks and months. Really, like it's certain areas of the country, especially, we've seen that increase. One where you're at, Rick, out in California, we see those costs increase dramatically. So. I would say it's a great tool to use as a property owner. It's a little different than the tenant side, where the cost of your property insurance is generally a little bit higher than like a tenant policy because you're covering a full structure. So adding on a little bit more liability coverage or an umbrella policy is generally kind of they do about a cost per million. So it's kind of a base cost for the first million that usually reduces as you increase above that. The standard policy usually includes 1 million in liability, and then you add on another million. And a lot of that we want to marry to like your assets in the structure, right? So, or in the property. So, really to cover those assets and anything that could be potentially lost in a litigation scenario. So, I think it's highly important to at least visit and see if it fits within kind of the overall portfolio. But I would definitely lean towards increasing those liability limits in your as a property owner.
Nice. Okay. So, and then we'll kind of go into some of the Q&A and all that. So, because everyone's now so excited about insurance, as soon as we get off this call, they're going to jump right into their policies and start reviewing them before they give you guys a call. What are like one or two things they should be reviewing right now? Daniel, you'll go first.
Sure. Yeah, I go back to those three things. Encourage every property owner on this call, property manager, real estate broker, anybody in the industry, do these three things immediately, either with your clients or on your property. The first is going to review the coverage limits. So I will actually first find the agent who wrote the policy and work with them. They should be able to advise you and make sure that everything is, as it should be. But review the coverage limits. Make sure the big one that we're seeing is the reconstruction cost of the building is inflation is going faster than the reconstruction costs are a lot of times. We're seeing that increase dramatically. There's things like remember a few years back in the Suez Canal, I think it was the Ever Given kind of ran aground and we had supply chain issues. So think about all the construction materials that were delayed and that we're still feeling effects of that. There's, tariffs and things like that in place that are slowing some of the construction materials coming in, or at least increasing the cost of those things. So that rebuild cost, I know a lot of times you may look at that number and say, my building's not worth that much. That's crazy. That may be a market that you're thinking about. The market fluctuates, right? But the cost to replace is much different than the market value. So make sure those reconstruction costs or that coverage is in place. The second one is that liability coverage. Like I said, we live in a highly legal environment, and a lot of times we see that landlords end up carrying lower liability protection limits than they probably should. And then that third one was that the loss of rent coverage. That's again your big. That's how you're making money, right? So make sure that is again commensurate with the actual rents you're pulling in. Just easy math. If you're pulling in 100 grand a month, you should have something commensurate with that. You should have at least 1 year of protection built into your policy. A lot of times you'll see something that says ALS or actual loss sustained. That's actually more advantageous from a loss of rents coverage perspective, because now they're not defining a time period. They're just saying as long as that time it takes to recoup that loss or repair that building and make it rentable again. So some nuances there, things that you would want to work with a great agent on. And then also, this is again, like he's caveated at the beginning, this is on a by state kind of policy structure. All that should be reviewed, individually by an agent.
Yeah. Very nice. And then Rob, what are one or two things they should be reviewing right now after the call?
Sure. And I added a couple. I'll add a couple based on the questions that came through. So one of the questions that was asked was renters insurance versus legal liability. Well, if they have renters insurance, they also have legal liability. It is not a specific coverage that you would know within the policy. It's just how the policy works. It really is a third party claim against the liability limit for something that might have been caused by the tenant, or really they're legally liable for. So we do run that program. We've got a number of our customers who have a tenant legal liability program, and it's all managed through our software, which is pretty good. So that actually leads me to another one, which is someone mentioned about tracking. If there's anything you should do, it's the very minimum is have your tenant provide proof of coverage, and specifically require them to add you as an additional interested party, not additional insured. That doesn't work for renters insurance. It's called additional interested party. All the insurance companies and agents know what this is, and all you need to do is require it as your name and address. And what that means is that if that policy cancels, the insurance company will send you a notification of the cancellation of that policy. And that way you'll know. Now we do have some tracking software that we use to track that for our customers. That's where the legal liability could come in as kind of a backstop. That's probably a topic for a different day. And but that's really important because I know it's taxing to kind of like require it and then track it and then monitor it and check it. So, but it's really important. So the other one was limits. People asked what specific limits should review, and where do you state those requirements? So really, from a renter's insurance, you can phrase it as liability. You can phrase it as legal liability. Any of those things count. Personal liability as well. Please do not call it general liability. That's a commercial term, and it sometimes gets people confused. So it really is just, you can just say liability. And the minimum we see is $100,000 as the minimum. There are policies that you can have up to 500,000. That limit is not as available in the market. It's getting there, but it's not as widely available. But really what you want to look at is what would be that reconstruction cost of that specific unit or home or whatever it is, or Rick's garage. What would that cost if the whole thing were damaged or burned down? That's the limit you want to look at. 100,000, 200,000, 300,000 are very common these days. And then also, if there is availability for pet damage and you want to have that, then ask about that. And you can, require that they have pet damage on their insurance policy, or they can submit a separate insurance policy that covers them for pet damage or for pet liabilities. And then the best place to do this that we've seen is within the lease itself. There's often a lease addendum, which you may want to speak with your attorney, but addendums are usually the place where you can make changes to that without impacting the rest of the lease. But that's usually where we see it, is a specific addendum that goes specific to the insurance requirements that they must do, which would include the limit and include you being listed as the additional interested party.
Very nice. Okay, so now as we get kind of wrapping things up, and we'll get to some of the questions. Let's kind of do some closing thoughts here. So, Rob, Daniel, what are some, like, a final thought from each of you? Like, what's the most important thing landlords should understand about insurance and protecting their rental properties? We'll start with Rob.
Sure. I think it really is, consider renter's insurance or a legal liability policy for tenants. Consider it as part of your overall insurance program. Don't just buy a policy from an agent. Consider all of the aspects that Daniel and I have been talking about, and make sure that you are working on an insurance program overall that would really help to protect your asset and your future income.
Nice. All right, Daniel.
Absolutely. Yeah, I would really echo that. I mean, I think insurance really works best when it's part of an overall kind of risk management strategy. So the most success we find is when property owners are proactive versus reactive, right? They maintain the properties. They have a rock solid documentation of updates and incident reports and things like that. They have clear communication, either both written, primarily with their tenants, and also they kind of review and understand their coverage. They review regularly. And I think really thinking about kind of as a risk management aspect, they're thinking about a claim before it happens, right? So that's where that maintenance comes into play, and making sure that the property is well maintained and taken care of, and that managerial oversight is really evident. So at the end of the day, the insurance policy again is a piece of the overall management process, but it's to protect the long-term financial stability and success of your investment.
Great. All right. So let's go into some of the Q&A. I'll start with my little riddle. So, California, you have a tenant with a emotional support animal, so you cannot deny them. What if that animal is on the breed restrictions list? Daniel, what are your thoughts?
That's the classic underwriting question or response. It marries with the legal responses. It depends, right? Generally, there's a caveat or an exception to every
Yeah.
rule. So usually when an animal is a service animal, those are generally excluded from those rules. That is what we'd consider kind of part of a protected demographic, if you will. We cannot deny coverage or eliminate or reduce coverage based on a protected demographic. So think, gender, age, things like that, and disability would all fall within that. So from our perspective as the carrier writing a landlord policy, we would accept that. Again, we'd probably maybe request the paperwork to understand that they truly are, a certified service dog or something like that. But it would generally not fall within that excluded breeds list.
Got it. And then for Rob, same question, but I think you kind of answered it earlier where you don't necessarily have a lot of breed restriction requirements. Is that right?
Sure, but I also want to be clear that so our renter's insurance policy does not have breed restriction, but the amount of limit that's available for those types of damage is lower. That's the trade-off. No breed restriction, but you
Interesting.
don't have access to the full amount. You can have access to the full amount, but now you have breed restrictions. And so I think there's two different components, or maybe three. One is the laws that prevent property owners or managers from denying residency for someone with a documented, support animal. The second one is they're still an animal, and I think everyone knows that not all of those documentations are completely accurate. And so if that animal bites somebody, that doesn't necessarily mean that that bite is okay. Someone's still going to be responsible for the dog bite, regardless of what their credentials are. And so that's why it's important to look at that is your insurance policy should still be able to cover that. And now to what Daniel said, then it would become a claims question. Well, that's on the breed restriction, but they were allowed to have it. But that's, tell that to the person who just got bit. They don't really care. Yeah, and then the third piece really is the management of the dog. So I've kind of had some, I talked to a lot of people about the about pet liability and accessibility within units, and I'm working with a couple of different companies on, how do we help educate and encourage more property owners and managers to allow people with pets. And what I've come to realize in a lot of these different reports and reviews is that we often underwrite the animal, but we really should be underwriting the animal owner. There are some really great and amazing dogs that are on that breed restriction list that I've never seen anything bad happen. And it's not the dog, it's usually the owner.
Right. Yeah, I will tell you as a landlord myself, I can 100% agree with that. It's like it's never the pet. It's usually the owner, right? They just didn't put the dog through obedience school, or they just don't keep an eye on them. They kind of let them roam wild. Like there's always some sort of responsibility there. So I
Yeah.
definitely I like that one. So let's kind of dive into some of the questions. I am having some technical difficulties, so I do apologize, but I was able to write down a few. So we'll start with HOAs. There was someone, so they're like, well, if I have a condo and there's an HOA, they have insurance, we have insurance. How does those two entities kind of interact? Daniel, why don't we start with you?
Yeah, I saw that one, and that was one that kind of keyed as well. That one's tricky because it really comes down to the governing documents of that HOA. That's truly what they are. They govern how the HOA interacts with the owners. So as an individual unit owner, you turn to those governing documents. And that's generally how our policy is set up as well, is it is to follow the governing documents. So it could be a situation in your governing documents. There's really a handful of ways that an association is set up. And it can cover bare walls, as the master policy will cover bare walls. Essentially, we'll rebuild you a shell. You've got drywalls and studs in is all up to you. That's a bare walls policy. There's also an all-in policy that would cover everything down to the flooring, the cabinetry, everything. That's an all-in policy. There's also some kind of in the middle. There's an original spec where it has to go back to the original builder spec. So there's a few variations, and really the answer is it comes down to what those governing documents say, and that's how we determine how we interact from an insurance perspective with that HOA or COA or whatever it is.
Got it. Okay. Rob, was there anything else you wanted to kind of add to that?
Yeah, if I could just piggyback on that, because in a lot of those scenarios, it's almost like you have three insurance policies. You have the insurance policy that the HOA carries, and to Daniel's point, it's all rules in there based on the HOA bylaws. But then the condo owner's insurance, which is the same as a homeowner's insurance policy, but that also covers the things based on the bylaws. And that covers damages for whatever that means. Usually, things that it's usually their contents, but you want to look into that. And then, of course, it's the renter requiring them to have renter's insurance because you don't want to be responsible for their belongings or their liability.
Do they ever, have you guys ever seen a scenario where they actually interact with each other? So like the HOA insurance is talking to landlord insurance, dealing with this tenant issue. Have you ever seen that, Rob?
No, I've not seen that. They tend to stay separated. And because
Hmm,
each of the policies is fairly well defined on what is and is not covered.
got it.
If
That makes
anything,
sense.
it'd be kind of that layering we talked about earlier, where the renter's
Mhm.
insurance might pay first, the condo might be second, and then the HOA insurance might pay third. It just depends on what was actually damaged, and all the details.
Like, yeah, like who caused it? Was it someone from the HOA versus the owner versus, yeah, I could see how that could be a little messy. Another question that come up was there's like tenant, renters policy, tenants liability policy. Is this kind of like one and the same, Rob, or are they actually separate policies?
It depends on who you talk to. They can be separate policies. So if anyone's kind of been in the industry, there is a what's called a master policy or a master program that specifically covers just liability. You can certainly add a couple endorsements, but it's primarily for the tenant legal liability, which is
Hmm.
tenant caused damages. It benefits the property manager or owner, but not the renter themselves. And so all it does is allows the renter to not have to buy their own insurance and still be compliant with their lease, but they don't benefit from that. So at the time of a claim or if something happens to the unit, they tend to assume that that coverage was renter's insurance for them. And so they'll come to the landlord and say, well, there's fire now. The insurance policy you made me buy, that's going to pay me, right? And it's like, no, it's not. So it's just about education on, speaking with whoever you're talking to about what the differences are and to make sure that you're communicating appropriately.
Do you typically coach or advise the landlords to kind of, I don't know the best way to put it. I don't want to say steer. That's a poor choice of words. When you say, "Hey, tenant, you need to get renter's insurance," do you ever say, "Hey, look, this is the company I want you to use. This is the policy I want you to use," or is it more of just, "This is my limitation. These are my limits that I'm expecting."
Oh, they can certainly recommend. There are
Hmm.
every insurance, carrier or company or agency. Everyone has a reputation, and uh,
Right.
and it depends on who you talk to on what that
Hmm.
reputation is. Particularly at the time of a claim. I mean, that's really when insurance matters, is how are things handled at the time of a claim, and what type of tracking and monitoring might be available, and how easy they are to deal with. So definitely they can legally require in most states, most municipalities, they can legally require the liability limit. They obviously can't require them to go with a specific company, but they're more than welcome to refer to one if they have good experience with them.
Yeah, because I was thinking about that. Like in my policies, I don't necessarily say who they have to go with, but I almost wonder if it's like, look, here's three companies that
Sure.
we might recommend. Because
Mhm.
it's always good to like pair recommendations in groups, so that way they can't come back and say, well, you forced us to use
Mhm.
That's
insurance
right.
company A when you had A, B, and C to choose from.
Mhm.
Daniel, was there anything you wanted to add?
That was going to be the caveat that I would recommend maybe just a couple of folks to recommend versus just to kind of reduce the sense of maybe you said to go with them, so I went with them, and now this wasn't covered, so I'm also gonna loop you into this mess that I'm in. So but Outside of that, yeah, I would fully support what Rob said. Yeah, if you've got great folks that you can recommend, obviously, Rob's group does an amazing job. They actually partner with us as well, so full circle. There's nothing wrong with that. Knowing that you can recommend a company that is going to help them out and provide the coverage that you want for them to have.
Yeah, no, for sure. Okay, gentlemen, thank you guys so much for doing this because I know we're kind of getting to the next hour. So I want to thank our speakers, Daniel and Rob, for sharing your insights today. It was super appreciative. And thank you to everyone who joined in on the landlord session. Hopefully, you guys got something out of it, right? Insurance is very complicated. It's becoming more complicated. Every feels like every time there's a new disaster, things change. So it's always good to kind of stay on top of everything to protect your properties, your business. For the front lobby members, you can explore trusted insurance providers, right? So you can go directly to the front lobby marketplace. And also, Front Lobby is opening up 10 free strategy calls. So you can talk with a rent reporting expert to further protect your business. And as I mentioned in the beginning, we will be sending out the recordings and any additional highlights from today's session by email. So thanks again to everyone for coming. Thank you, Front Lobby, for organizing and hosting this. And we will see you at the next Landlord Lessons session. Thank you, guys.
Thanks for having me.
Thanks for having us. Have a good one.